Welcome to my YouTube channel Equityverse, that is Universe of Equity Research Report, your gateway to professional grade equity research. Today we will discuss analyze Reliance Industries, the engine of India's economic story, transforming from a oil driven to a digital retail and green energy powerhouse. India's largest and most diversified conglomerate. Let us start. Company overview. Reliance Industries Ltd is India's largest conglomerate with a diversified portfolio across oil to chemicals, O2C, refining, petrochemicals, polymers, digital services, Geo Platforms Limited that includes telecom, broadband, OTT, AI and cloud. Retail, that is Reliance Retail Ventures Limited, RRVL, across grocery, electronics, fashion and pharma. New energy, solar, green, hydrogen and battery ecosystems. This is emerging segment. Reliance Industries was founded by Dhirubhai Ambani. Now the currently chairman is Mukesh D. Ambani. Its market capitalization in October 2025 rupees 22.2 lakh crore. Its headquarters is Mumbai in India. With a market of cap of rupees 20 lakh crore, over 20 lakh crore, Reliance stands at the center of India's growth story, transforming from an oil-driven enterprise to a digital and consumer technology powerhouse. Investment thesis. Let us know about this. Reliance Industries is transitioning from a hydrocarbon-driven behemoth to a digital and consumer-led powerhouse, blending petrochemicals cash flows with high-growth digital and retail platforms. Reliance Industries operates on the three pillars: energy, digital, and retail. Its legacy: petrochemical cash flows fund high-growth consumer and technology ventures. Nearly 50% of its EBITDA was now comes from geo and retail compared to just 15% 5 years ago. Key positives are a strong integrated business model. It has set up a strong business model that is integrated of its segments. Leadership telecom and organized retail. Its leadership are unique, that is behind the improving its status in this industry in telecom and organized retail. A strategic investment in green energy and AI infrastructure. Solid balance sheet post recapitalization of geo and retail arms. Key risks: margin volatility in refining and O2C segments. High capex intensity, rupees 1.2 lakh crore annually. Execution risk in new energy and digital ecosystem. This strategic shift makes Reliance long-term compounding machine, blending old economy stability with new economy scalability. Reliance strategy yet powerful use its petrochemical cash engines to fund the next wave of India's consumption and digital revolution. It is no longer just an oil company, it is a now tech and consumer ecosystem in motion. Business mix and a segment overview. Diversification ratio. Consumer segment contains digital plus retail, now contributes 50% of total EBITDA versus 15% is less than 15% 5 years ago, signaling a transformational business shift. Its revenue in financial 25, EBITDA contribution and growth driver. Let us analyze this table. Revenue in financial 25, 60,000 crore. Its EBITDA contribution 38%. Its growth driver were refining margin recovery. In 1,35,000, EBITDA 32%, in which 5G Rollout monetization. ARPU growth, average revenue per share. ARPU growth means average revenue per share. It states average revenue per share. It measures how much revenue a company earns per customer as per user over a given period, usually per month in telecom and digital services. It directly measures monetization efficiency per customer. Next, 2,75,000. Its EBIT contribution 22%. Growth driver were in this segment store expansion plus e-commerce. In solar modulus and hydrogen investments growth driver segment EBITDA contribution 3%, 22% and is solar modulus and hydrogen investment is revenue generate 25,000 and EBITDA contribution 3%. In media textile subsidiary segments revenue generated 15,000 and its contribution EBITDA 5%. Now comes digital business, Jio Platforms Limited. Digital business, Jio Platforms. Let us start with Jio Platforms. As of financial 25, Jio has 481 million subscribers, a 52% EBITDA margin, and the highest data consumption globally. Its 5G rollout covers nearly 98% of India's population. 5G coverage in 98% of India's coverage. Average revenue per user ARPU 191 rupees. Key developments. Jio 5G standalone network launched pan India without vendor dependence. A strategic partnership Google, Meta, Qualcomm, Microsoft for AI and cloud stack. Launch of Jio AI suite for enterprise automation and analytics. Digital revenue CAGR. Financial 21 to financial 25 it is expected 17.8%. Jio continues to dominate the Indian telecom space with over 40% market share. The company's push toward AI-driven B2B solution and Jio fiber to home expansion position it as India's leading digital infrastructure backbone. With partnership with Google, Meta and Microsoft, Jio is positioning itself as a digital infrastructure layer of India's economy. With full-scale 5G coverage and AI-based cloud offerings, Jio is positioning itself as India's digital infrastructure backbone. What is their B2B solution? Let us see. It refers the digital products and services designed for enterprise, SME and institutions, helping them digitize operations, improve productivity and reduce cost. In the case of Jio platforms, B2B means extending Jio's digital ecosystem beyond individuals, consumers to empower businesses with connectivity, cloud and AI-driven solutions. Now come we in retail segment. Reliance Retail Ventures Limited. Let us analyze its performance in financial 24. Revenue 2.5 lakh crore plus 75% Y to yield on yield. EBITDA 20,900 crore plus 90% YOU. Store count 19,500 plus across 7,000 towns. Online platforms JioMart, AIGO, Netmates and Urban Ladder. Reliance Retail is in India's largest retailer with over 19,500 stores across 7,000 towns with over 250 million customers. Revenue grew 17% last year to rupees 2.5 lakh crore with EBITDA at rupees 20,900 crore. Through platforms like JioMart, AGIO, and Netmates, Reliance is merging physical and digital retail, building like the Amazon, Walmart, and Walgreen of India. Aggressive omni key highlights. are aggressive omni-channel expansion, integrating physical plus digital retail. Fashion and lifestyle segment now 25% of total sales. Fast-moving consumer goods launch Independence brand, gaining traction in tier 2 to 3 cities. In tier 2, 3 cities. Independence, what is Independence? Reliance Retail launches Independence, its own home growth FMG fast moving consumer goods brand. Their brand is tagline is mean Kankan mein Bharat. Reliance Retail is evolving into India as a Walmart plus Amazon plus Walgreens and equivalent, combining logistics, payments and digital data analytics for consumer engagement. It is India's largest retailer by revenue, profit and reach. It is giving competition to Walmart, Amazon, Walgreens and equivalent. It is becoming, it is trying, Reliance industry trying to succeed, over succeed to Walmart, Amazon, Walgreens in coming future, in coming years. Now segment is oil to chemical segment. O2C remains the cash cow of RIL, providing steady free cash flow for funding digital and energy ventures. With recovery in global refining margin and petrochemical demand, the segment is stabilizing post the financial year 23 high base. Capital expenditure outlook: commissioning of butadiene and PVC capacity 25-26, expansion of Jamnagar downstream units, renewable integration to lower emissions footprint. Metric: revenue in 23 financial year 7 lakh crore, in 24 7 lakh 50,000 and expected in 25 6 lakh 80,000. EBITDA margin 10.8% in 23, in 24 9.5 and expected in 25 10%. GRM 12.3, 10.1 and 11. The oil to chemicals division remains Reliance cash engine, generating cash despite global volatility. In global market, there is volatile market in this sector, but Reliance Industries is growing very fast. With refining margins averaging 10 to $11 per barrel, it provides consistent cash flows for new ventures. The Jamnagar refinery continues to rank among the world's most efficient and integrated operations, funding Reliance diversification into digital and energy transitions. Now move to CAPEX roadmap and new energy vision. Reliance Capital Cycle is transitioning from hydrocarbons to green and digital, aiming for carbon neutrality by 2035 and global leadership in clean energy manufacturing. Its focus area are in 25 financial year expected capital expenditure, timeline and goal. Solar module manufacturing 25,000 crore expected, timeline 25 to 26, goal 20 the GW capacity to producing 20 GW capacity. Green hydrogen 35,000 in financial year 25 expected, timeline 26 to 28, goal 1 MTPA hydrogen. Battery and storage 10,000 crore, timeline 25 to 27, goal integrated gigafactory. In retail and digital infra 30,000 capital expenditure is expected 25 and timeline 25-26, goal to improve AI, cloud, e-commerce and total annual capital expenditure is expected in 25 1.2 lakh crore. Goal long term diversification. Reliance investing 1.2 lakh crore in the future across digital, AI infrastructure, cloud database, solar modules, hydrogen production and storage batteries. Its goals are carbon neutrality by carbon reduces to zero by 2035 and leadership India's clean energy transition. With new giga factories coming up in Jamnagar, Reliance is laying the foundation for India's green energy revolution. This is the largest transformation project in corporate India. Very doing Reliance Industries doing very well in all sector its segment. Now comes to financial analysis. Profitability is improving with a strong EBITDA contribution from consumer and digital segments offsetting cyclicality in O2C. Return ratio are expected to rise post completion of capex cycle by financial 27. Metrics in financial 23, financial year 24 and expected in financial 25. Revenue in 23 8 lakh 33,000 crore, in 24 10 lakh 55,000 crore, in financial year expected 20 in 25 11 lakh 50,000 crore. EBITDA financial year it was in financial year 1 crore 1 lakh 42,000, in financial year 1 lakh 70,000 and in financial year expected it is expected in financial 25 1 lakh 92,000. Profit after tax in financial year it was 66,700 crore, in 24 79,000 crore and it is expected in 25 92,000 crore profit after tax. Now earning per share 96 crore EPS 96 in 23 and in 24 112 and in financial 25 it is expected 130. Debt and equity ratio 0.34 in 23, in 24 0.41 and in 24 expected 0.43. Not bad, good. And it is a good equity oriented company taking less debt. ROCE return on capital employed 8.9% in 23 and 9.6 in 24. In it is expected in 25 10.3. Return on equity 9.2 in 23, 9.8% in 24 and 10.5 in it is expected in 25. Financially, Reliance remains robust. Revenue rose from rupees 8.3 lakh crore in financial 23 to an estimated 11.5 lakh crore in financial 25. Net profit is expected to cross 92,000 crore with an ROE of 10.5%. This diversified revenue model protects earnings even during sectoral downturns. Reliance profit growth remains robust at over 15% CAGR. The diversified business model acts as a natural hedge when while margins soften digital retail step up. Now next, peer comparison. We now come on peer comparison. There are many companies that is competing with Reliance Industries. Reliance commands a premium valuation due to its unique business integration across energy, digital retail. No direct peer offers comparable diversification and scalability. Company Reliance Industries revenue 10 lakh 55,000 crore, EBITDA margin 16.1, return on equity 9.8, price earning 24, EV enterprise value to EBITDA ratio 11. Core focus diversified O2C digital retail. Adani Enterprises 1 lakh 35,000 revenue generated and 12.4 EBITDA margin, return on equity 8.5, price earning ratio 35 and enterprise value to EBITDA 14. The course business focus infrastructure, logistics and energy. ONGC revenue generated 6 lakh 50,000, EBITDA 22, return on equity 12.5, price earning 8, EV by EBITDA for forex. Core business are in ER of ONGC, oil and gas, ENP, energy and power. Bharti Airtel 1 lakh 50,000 revenue generated EBIT margin 48%, return on equity 32.5 13.2%, price earning ratio 28x, EBIT 20x. Telecom, core focus is telecom. Now DMart 52,000 revenue generated, EBITDA margin 9%, ROE 16%, price earning 110, EBITDA 58. Core focus is retail industry. Compared to peers like Adani Enterprise, ONGC, Airtel and DMart, Reliance stands apart in both diversification and scale. It trades at 25 times earnings at a justified premium for a company that combines energy, telecom, retail and clean tech under one umbrella. No Indian company matches Reliance breadth, its energy player, a telecom leader and a retail empire rolled into one. That is why it commands a premium valuation among India's corporates. Now comes to valuation and outlook. Valuation insights. We value Reliance Industries Ltd using SOTP, sum of the parts methodology. Digital Geo platforms 900 rupees 950 per share. Retail rupees 750 per share. O2C 9 rupees 900 per share. New energy rupees 250 per share. Others segments rupees 400 per share. Total value rupees 3,250 per share. Metrics. Now we analyze on the metrics in financial year 25 expected and financial 26 expected. EPS 113.25 it is expected and 148 in expected in 26. Book value per share 1050 in 25 and in 26 1160. Target price earnings 25 in 25, 24 in 26. Target price is 3,200 to 50. 3,250. Current market price is 1,484.7 rupees. Upside potential plus 119%. There is commanding position. Upside potential is in market 119%. We value Reliance at rupees 3,250 per share using a sum of the parts valuation. Jio contributes rupees 950, retail rupees 750, while to chemicals rupees 900 and new energy rupees 250 per share. At the current market price of Reliance is 1,484. That is a potential of 119% upside over 12 months. The long-term story remains compelling as execution shifts from hydrocarbon to high-growth consumer tech. Now comes environmental, social and governance sustainability. ESG score is 78 by 100. A strong sustainability transition. Pillars are and highlights. Environmental, net zero by 2035, 10 billion renewable investment plan, $10 billion investment plan. Social, in social sector, rupees 3 lakh implies inclusive retail employment, rural geo expansion. Governments, transparent capital structure, global standard disclosure. Analyst recommendation. Our YouTube channel does not recommend because we are only education purpose, providing video lecture only for education purpose, not recommending any stock to buy, purchase and hold. Target price rupees 3,250. Investment horizon 12 to 18 months. Risk rating moderate. Triggers: Geos ARPU expansion, retail profitability inflection, green hydrogen commissioning, margin normalization in O2C. Reliance Industries embodies India's economic future from hydrocarbons to hydrogen, from data to digital commerce. Its balance sheet strength, execution record, and visionary investments make it India's most influential corporate story of this decade. Reliance Industries is India's corporate evolution from AI from refining to digital transformation with unmatched scale and vision. It remains a cornerstone stock to every long-term portfolio. Reliance Industries stands at the intersection of India's digital, retail and energy revolution. It is concluded now. With its unmatched scale, integration, innovation roadmap, Reliance Industries Ltd remains India's most valuable diversified play for the next decade. Expected CAGR return in 25 and 27 financial year 13 to 15%. Thank you for watching for my YouTube channel Equityverse. I hope you have liked this. My content. Please subscribe my channel Equityverse, like and press icon bell button for that uploading video will reach to you as soon as possible. We will see you in next video. Till then, goodbye.